So if you are at the age of 21, earning around $50,000 per year before taxes, and you want to retire at the age of 67 with no superannuation balance at the moment and with 11% contribution from your employer, you could end up getting around $381,927 in your superannuation account by the time you retire. That's a lot of money, right? Well, the chances are that if you're a new international student in Australia, you haven't been paying much attention to your superannuation. Hopefully, this gives you a little bit of context on how important your superannuation is, and you must pay attention to it. After all, it is your money. So in this video, we'll give you a quick crash course on superannuation in Australia for international students. Let's get into the video. Now, before we get into details about this topic, just a quick disclaimer here that I'm not a financial advisor or an accountant. The information I'm going to give you is general in nature. You should consider your own personal circumstances and speak to a registered financial planner or an accountant to discuss about your specific scenario. And that out of the way, let's get into the video. First thing first, what is superannuation? Superannuation is also known as super here in Australia. Basically, it is a retirement saving system. So over the period of your working life, you save this money for your retirement so you can have a comfortable life after retirement. And it is mandatory for all people working here in Australia. So you can call this superannuation like a special piggy bank. So in this piggy bank, over the period of your working life, your employers pay money into it and it gets larger and larger over a period of time, and by the time you retire, you can break this piggy bank and get the money out of it. Now, how is superannuation usually calculated? Superannuation is calculated based as a percentage of your salary or wages. So currently it is 11%. Let's say you are earning $1,000 per week. You can multiply that by 11%. That is around $110. That is the money you are earning as a superannuation. And that money goes into your superannuation fund account. While the current rate is 11%, but if you look at this table, it will continue to go up in the coming years until it reach 12%. So by the time we reach in year 2025, 2026, we'll be reaching 12% of your wages and salary. So just to be clear, it is paid on top of your salary or wages and it is not deducted from your salary. So consider it as a bonus on top of your wages or salary you're earning. Now, the next important question is, are you even eligible for getting superannuation? Most temporary residents who are working in Australia, that includes international students, are usually eligible for superannuation. So if you are an international student and working in Australia, the chances are that you are eligible for superannuation. So now let's discuss about how it actually works in real life. So if you are going to work in Australia, the first thing you will need is TFN, tax file number. This is a very important number that you need to get before you start working as an employee here in Australia. And once you find a job and you're going to start working, you will need to provide this TFN number, and you will also need to provide a superannuation fund account number to your employer. You can open this superannuation fund account once you find a job. So you don't need to open it right away after getting a TFN. However, you can if you want to. And there are many types of superannuation fund accounts you can choose from. Sometimes your employers can allow you to choose your own superannuation fund account, while other times your employer may ask you to choose a specific superannuation fund. So you can ask your employers if you have a choice to choose your own, or you have to stick to the one they are actually asking you to choose. And as you start working and start earning money, your employers will start contributing to your superannuation fund account based on the percentages we talked about earlier, which is 11% currently. Now, they don't pay this money straight away into your superannuation account on the day you earn money as your salary or wages. Currently, they are required to pay this on a quarterly basis. So every 3 months, your employers must pay this money into your superannuation fund account. And as you can imagine, if your employer keeps contributing to it, your superannuation fund keeps growing over a period of time. And not only your employers, but also the superannuation company you have opened your account with, they will invest your super money into different assets. It could be property, shares, cash, or some others. And if you want, you can also do some contribution yourself as well. It is known as salary sacrifice by the employees. And once you reach at the retirement age and meet other requirements, then you can start withdrawing money from the superannuation fund account. Again, the idea behind this system is to make sure that you can support yourself financially when you retire, which is actually a pretty good system. So that was quickly on how superannuation works. Now let's discuss about how to choose a superannuation fund account. So if your employer gives you a choice to choose your own super fund account, there are many type of superannuation companies that are available that you can open account with. So which ones to choose from? Now I can't advise you on exactly which ones you should choose, but here are a few things you keep in mind when choosing a super fund account. The first one is the performance, how the superannuation fund account is actually performing. So you can compare between different superannuation companies to see how their returns are, how much percentage they are giving back, to see how they're actually performing over a period of time. Apart from that, you should also look at the fees. Fees is one of the most important part when choosing your superannuation fund account. So compare and find out which of the super companies are offering a lower fees to their members. And next thing is insurances. What type of insurance coverages are available, and if you really need all of them, you have to consider that option also. And last but not the least is investment options. What sort of investment options the superannuation company allows you to do. So there are multiple type of investment options you can have, and you can choose whichever fits your strategy. Now we will leave a very useful link in the description box below where you can check and compare between different superannuation companies and their performances and their fees and so on. So very handy tool by the Australian Taxation Office, and it is free to use. So feel free to jump online and check that. Now the next thing in your mind might be when you can actually access your superannuation. As we have been talking about it, that when you reach a certain retirement age and meet other requirements, then you can access this superannuation. But apart from that, there are other scenarios as well, such as when you can't work due to some medical condition, or you have a financial hardship, or if you have certain disability or terminal illness. But for international students, one of the most important thing to note is that you can also access this superannuation money when you are leaving country permanently. So if you have no plans to return back to Australia after your visa expires and you left the country, that's when you can actually access superannuation as well. So you will need to complete some forms in order to get this money back to you. We will leave a link of a very useful article from the Australian Taxation Office for you to read if you are planning to leave the country permanently and you want to access your superannuation fund. So make sure to check this guide before leaving the country, as you may need to do some things before you actually leave Australia. Now last but not the least, here are a couple of important things to keep in mind. First thing first is to check your superannuation balance regularly. I'll give you my own example, as I was part of this guilty process myself as well, that I did not check my superannuation fund regularly. It did happen that one of the employer wasn't putting the money into my superannuation fund account, and once I reached out to them, they realized their mistake. They quickly paid all the money into my superannuation fund account. So make sure to check it regularly. And if you have worked at multiple jobs during your life here in Australia and you have a multiple superannuation fund accounts, you might consider consolidating them, which means instead of having, let's say, 3 or 4 different superannuation fund accounts, bring them into one, because it can help you to save some fees that they charge. Of course, each superannuation fund charge different fees, so you will end up paying a lot of fee for nothing. So you may have to consider whether it's a good option for you to bring them into one superannuation fund. And also very importantly, be mindful of the scams. There are a lot of scammers out there who may tell you that you can access your superannuation early by doing some dodgy stuff here and there. So please be mindful of that. And now there are a lot more information in regards to superannuation, and I highly recommend you to do a further research on these things, as it is a vital thing if you are going to work here in Australia. And we will make sure we'll leave all the useful links in the description box below so you can access the information yourself, including the one that we have used to do our research on. So that was about superannuation. But if you want to know about taxation system in Australia, which is also very important topic for you as an international student, please check this video that's appearing on screen right now. In this video, I explained about how the taxation system work here in Australia and what are the important things you need to be mindful of. So go and check that video and I'll see you there.